Hi, everyone. Welcome. My name is Joe Rokop, Managing Director of Commodities and Equities. Today is Thursday, June 24th, 2021. Time is about 3:15 p.m. I'm going to be with you for the next 15 minutes talking about the day, talking about some of our trades of late, and looking at the market, what happened since we last spoke, and what I expect to happen in the near future. So first and foremost, let's get started with what I have on right now in my mastery program. You can see the mastery results down here at the bottom. We had a tough day today. We were long the NQ with a stop loss at 14,330 and a swing low of 14,327.5. So we got stopped out by 2.5 points, which was an annoying and obnoxious bummer, but that is all part of trading. The trade we have on right now in the NQ is as follows. Okay, so we sold 6 lots at 14,360. Okay, and we're looking to cover at these prices. Keep in mind the NQ, we are talking about futures, okay, not options and not the indice. This is the future, and it's always the spot month. So it's NQ SEP 21 or NQU 21. Always trading the spot month. Okay, so we got short at 14,360. We covered one at 333, and these are our 4 remaining targets. If we break and those get filled, we'll have a profit of 8.1 thousand, which is pretty nice. Right now, we have recently pulled our stop loss in. This should be to 14,365. So about 4.5 points away from our entry. So if the market reverts back up and we get stopped out here at 14,365, we'll close the trade for a $100 win. So right now, worst case scenario is we walk away with about $100. Minus fees. Best case scenario, it breaks overnight. We wake up in the morning with a P&L of 8.2 thousand, which would be a nice little surprise, nice little present to start the day. So let's take a look at this trade on the charts. Okay, so after we got stopped out down here and shook it off. The market rallied back to the VWAP, or volume weighted average, which is this blue line. Okay. Now this was at about 1 o'clock here Central, 1:15. So the market had about an hour and 45 minutes to go. Now, when the market failed to really rally up through the VWAP with any might, it went about 10-15 points through. It fell back. Fast EMA crossed through slow EMA, and that's right where we shorted it. Okay, our first target was down here at 14,333, swing low at 14,332. So it cuts both ways, right? We got filled by 1 point, but we got stopped out by 2 points. The difference is we only covered 1 here, and we got stopped out on 6 here. So mathematically, that doesn't quite jive, but the thought process is the same, that we are doing really well with some of these levels, okay? Tough luck that it's trading through some of them here and there, but that does actually happen, or tend to happen, a bit more in the summer. So we have to go into the trade with that mindset that we might need to reduce our size and increase our stops a little bit so we don't get tagged, right? Versus, of course, just getting run over, which that happens too, but that's okay. Now, that is our NQ trade at the moment. Our other trade that we have on right now is in the CL crude oil. Okay. We are currently long from 73.07. Okay. So this was a rebound trade. The market rallied, went up, went through, and we got long here. Now, I would like to show you what happened to us from yesterday, where we got long down here at 72.78. The market rallied. This was up after going into the DOE yesterday, which is the inventory, the supply report for crude oil and the crude oil suite. Market rallied. We took one off on that pullback at 73.90. It dipped. We took another one off overnight. We got a fill here at 73.58, 3 cents off the dead high of the day. But where the bummer is we got stopped out at 72.40 with the stop loss at 72.38 or 72.32. So 8 points, 8 cents. And of course, this had rallied all the way back. We did re-engage here, as I mentioned, at 73.07. But that was 67 points higher, right? So 67 points on a 3-lot. That's about $2,000 that we missed out on because we had 8 cents on 3, which is about $240. So tough luck. But again, re-engage back here at 73.07. And let's see what that looks like. Okay, so at the moment, here's how this trade looks. 73.07 was our entry price. Here are our targets: 74.08, 74.43, and 75.01. So if this goes our way, we'll make 4.3 thousand. Okay. If it goes against us, we will lose $810. Okay. So that is a beautiful 1 to 5 risk reward trade, because we are only risking 27 cents. Right, whereas we are looking to make 144 cents. So in terms of risk reward, can't get any better than that. Now, our first target at 74.8 has not been filled. Okay, the market settled today at 73.32. So right now it's 25 points in our favor. Okay, so we're going to hold this overnight, and we will either end up losing 800, making 4,310, or falling somewhere in the middle. Okay. Now, if we do wake up with a loss, that's okay, because we also have that NQ trade, which you never know could be a big winner. If we get stopped out of both, that NQ trade will end up as a $100 winner, offsetting our $800 loss by 10%. Not a big deal, but that will give us plenty of room to try and operate tomorrow. But again, what you want to keep in mind and what you want to know are these P&L metrics down here, right? So far, our P&L graph looks like this. From a balance of 0, where the P&L started, it's now sitting up just under 60 grand. And that's in simply 3 months. Now, in order to follow along, you need a minimum balance requirement of 10K, and that would be with the brokerage house that allows you to operate with $1,000 per contract. I suggest taking a look at a company like Infinity. Okay, so we're just going to keep on rocking and rolling here at the strike zone and let the math just keep working itself out. And again, what's nice about the math is you don't have to do it. I do it for you. Okay. I would be for it. So I got a question. How can your minimum account balance be 10K to make 60K? Well, of course, that depends on where you get started, right? If you get started in the middle of a down streak, then yeah, that's going to be a tough go, and you're going to have to kind of reload. But when it started, okay, in March, let's see, day 1, 940, day 2, 1500, day 3, 1100, day 4, 3500, day 3, 3000, day 6, 2700, right? So we built up some risk capital, right? Now, again, if you get started and we have a bad day or a bad week or a bad string of trades, that's kind of how it works, right? That's why the minimum is 10K. Part of trading, right, is there are going to be bad days, there are going to be bad streaks, right? But you want to look at the sum, right? We have 36 up days, 25 down days. Our average win is 2,800. Our average loss is 2,000, right? But our hit ratio is 60% of the time, right? So, well, Ray, what you have to remember that again, that's what I started with, and we made 13 grand right off the bat. So I can only tell you what I did. If you don't follow all the alerts, if you get started, say on day 34 where we had a loss, or today where we had a loss, then yeah, you're gonna have some trouble. But the point being is that you just have to stick with it, right? And follow the sum of all of the data, right? If you are only, like if I were to only report one day or 1 week, then that wouldn't be a fair assessment of how the program is doing, right? If I just cherry picked, the best week I've had, like that would be baloney. But I'm showing you everything so you can get a fair assessment. So hopefully that answers your question and helps solidify what these ratios have done for the strike zone. So, all right. I am on the mic in the futures room tomorrow morning, so we encourage you to check that out. We have a free trial, or maybe it's $7. I don't remember off the top of my head. Not the guy to ask about that. But we do encourage you to check out the strike zone. That's $3.79 per quarter, I think. And in the last 60 days or 61 days of trading, you would have made that back 2 times over. So we highly encourage you to take a look at that. We've gotten some great responses. I'm also adding a lot more long-term trades, not just short-term intraday stuff, for the people with larger accounts who just want to put on positions and hold them, so that way they don't have to be in and out so quick over the course of a day. So that was one of some of the feedback, was people wanted to put on more risk over a longer period of time, so they didn't have to be as active during the intraday sessions. So that is something I'm adding to the program a little bit more. Now, that was the intent from the beginning, to have it set up that way. But what was happening is the trades were, our targets were just filled so fast, or our stop losses were hit so quickly, that the speed just was what it was, right? And that gave us the ability to reduce our overnight margin requirements, and we didn't even I don't want to say need to take those trades, but we had the appropriate amount of risk had already been assigned. And if the risk or the reward is taken out in a couple of hours versus a couple of days, and you kind of got to throw your hands up in the air. But I think things are slowing down now, and I'm kind of changing some of the risk profile to let people with the larger accounts take some of the larger, bigger swing trades. So we'll see how all of that works out. I'm kind of managing them, managing the long-term trades versus the short-term trades in separate buckets, but they're all going in the same account. We're just using slightly different metrics to define the precise risk rewards, and it's really simply a change in magnitude. So, all right, more than you might have wanted to hear, but again, started off simple and then got a little bit deeper into some of the metrics. But the objective being follow along with the alerts and let me take care of all of the math for you. So everyone, thanks for being here. Leo says hi. Lots of love to everyone out there. And of course, have yourself a profitable day.